traders, FX Pip Collector here. Today is Saturday, September 7th, and this is my Saturday video where I go through all the pairs that I follow on the daily time frame, which the daily time frame for me is part of the roadmap time frames I use to help me trade on the shorter time frames. It's like I always say, if you were dropped off in some strange city and you didn't know where you were, you didn't have a cell phone, you couldn't speak the language, without your roadmap, you would be completely lost. The same thing definitely applies with trading. If you do not know what your roadmap timeframes are doing, you're going to be completely lost on the sort of timeframes and not know what to do. So anyways, let's start at the bottom of the list and we'll work our way up to the more popular pairs up top, the US dollar pairs. And yeah, like I said, every single pair on this list right here, I do cover in my daily Zoom meetings that I do with my members. I also do share every single swing trade that I take with the members at the time of entry, which is why I like to call my membership Learn and Earn at the same time, because hopefully while you're learning by following along with my 35 video trading course and attending my daily weekday Zoom meetings that are about 2 hours long, hopefully while you're learning to trade, you're going to be earning by following along with all my swing trade setups. Just keep in mind that I definitely am a swing trader. I definitely do not consider myself a scalper for sure, and not even really much of a day trader. Definitely mostly swing trades. So anyways, if anybody's interested in that, the website is in the description. It's fxpipcollector.com. It's only $30 a month. It's a very cheap membership. So anyways, starting off at the bottom at the US 30, man, the US indices really broke structure today in a big way. Big break of structure. So now I got my Fibonacci retracement on this last move up right here. Now, some of these actually look like they could be a wave A and it could be a wave B. And if it is a wave B, then potentially it could go all the way down, take out all these lows for like a big wave C. But we don't really know that to be true or not, so we got our Fibonacci retracement out here because if it does make one, two, three waves down to a Fibonacci level, which really it could be any one of them with a nice big engulfing move to the upside, I would definitely stop looking for shorts. But as of right now, because we either think it's going down to make a big wave C or it's going down to make a three-wave pattern to a Fibonacci level, until we get a confirmation that it's going back up on our roadmap time frame, I'm definitely looking for shorts on these sort of time frames. Moving on to the Nasdaq. The Nasdaq is actually one of the ones that really looks like an ABC, which this is supposed to be down there. But this one definitely looks like an ABC. This is most likely a downtrend right here for a wave A. I think this is a wave B right here. Most likely we are going down for a wave C. Most likely this wave C will take out the low of wave A. So we do plan on looking for shorts coming into the next week at the end of pullbacks. So let's keep going on the S&P 500. S&P 500 also gave us a very significant break of structure to the downside on our roadmap time frame. So now the roadmap time frame is telling us to look for shorts. Just like the US 30, we don't know for sure whether this is going to go all the way down and make a wave C. I kind of think that it probably is going to do that. Probably an ABC correction. But just in case, we got a Fibonacci retracement on this last move up, because if it does decide to make three waves down to a Fibonacci retracement level, then give us a nice impulsive move to the upside with a break of structure, that's what would turn me back into a buyer. But for now, definitely looking for shorts on shorter time frames. Moving on to natural gas. Natural gas, I don't think it was this week, it was last week, made a very nice turn to the upside. This was a really nice trade because, first of all, we had a break of structure to the upside, which told us to stop looking for shorts and start looking for longs. Then we had a 1, 2, 3 way pullback, which at the time I had my Fibonacci retracement from here to here, so we had a three-way pullback to a Fibonacci level with a nice engulfing move to the upside. Now that tells me that we are either in a wave A or a wave 1. We either this is a wave B or a wave 2, and we're now either in a wave 3 or we are in a wave C. If it really is a wave C, then it'll probably go up to like the 100 or the 123, make a double top, and then a break of structure, proving that it's a wave C. If it really is a wave 3, then it'll probably bounce from Vim levels, but it will not break structure. It'll just keep on trending up. These are some of my favorite trades because I don't necessarily know whether it's a wave 3 or whether it's a wave C. But I do know that I'm going to continue to look for longs on sort of time frames and hopefully learn and earn at the same time, whether this is a wave 3 or whether this is a wave C. Moving on to oil. Oil is in a big downtrend, and if you zoom out a little bit, originally I was thinking that this move down was going to be a consequence move up, but I think it's pretty much proven itself that it probably isn't. So We had the end of a correction right here. Ever since that end of a correction, it does look like low, high, low, high, low, high, low. As long as it continues to make that low, high, low, high, low, high series on these higher time frames, like the 12-hour to daily time frame, then I would definitely continue to look for shorts. Maybe on like the 1 hour, 30-minute, 2 hour time frame. Definitely continue to look for shorts on pullbacks. So moving on to gold. Gold has been extremely sideways for quite some time now, but I think this is still, if you've seen my full top data videos, you probably know what I think about this one anyways, but I think this is a wave 4. I think this is a wave 1, a wave 2, and most likely a wave 3. I think we are likely in a wave 4 right now, especially with how corrective and overlapping it is, which I think is likely to go down a little bit further before it actually goes up and hits this 2550, 2560 area that I've been talking about for a long time to potentially end a wave 3 of wave 5. So short term, I do think it is going to go down a little bit more. Long term, I definitely still think it's in an uptrend, and I still am looking for that 2550, 2560 area. Moving on to the CAD Swiss. All the Swiss pairs are either an ABC and they're going to bounce from a Fibonacci level and go up like that, which I still think is pretty damn likely. It really looks like that is the most likely scenario. But we cannot rule out the possibility of it being a 1, 2, 3, which is why I like this style of strategy that we trade so much, because we don't know whether it's an ABC. We don't know whether it's a 1, 2, 3. If it's a 1, 2, 3, it'll just keep on going, making lower lows, lower highs. If it's an ABC, then this roadmap time frame will show us that double bottom breaker structure at a Fibonacci level. So we don't know what we're looking at, whether it's a 1, 2, 3 or an ABC, but guess what? We're going to continue to look for shorts on shorter time frames, hopefully while we learn and earn whether this is a wave 3 or whether this is a wave C. Moving on to the Kiwi Swiss, same concept. Now this one is a higher high, but this is definitely impulsive down with a little bit of a break. Then it kind of looks like 1, 2, 3 waves up. So same concept as the CAD Swiss. I think this is either a 1, 2, 3. If it is a 1, 2, 3, it'll just keep on going. If it's an ABC, that is just going to keep on going, eventually bouncing from a Fibonacci retracement level, breaking structure, confirming it's a wave C, and heading back up. Honestly, you don't really need to know the difference between a 1, 2, 3 or an ABC because you just continue to look for shorts on sort of time frames till your roadmap time frame proves wave 3 or proves wave C. And if you know what you're looking for, you definitely can tell the difference between a wave 3 and a wave C. If it proves to be a wave C, then we'll definitely stop looking for shorts and we'll start looking for longs again. Moving on to the Kiwi CAD. So the Kiwi CAD technically has not broken structure to the downside. So I mean, this could always just make a higher low and just keep on going up. So definitely be aware that the trend is up on the daily time frame, and that you really should honestly just continue to look for longs. It kind of does look like potentially it could make a bigger correction, possibly go down to one of these fib levels before it goes up. But the fact that it hasn't broken structure tells me that I am still primarily looking for longs on sort of time frames. And it never did take out this high right here, so probably it's more likely that it is just going to keep on going up. And we'll be looking for longs. So if that does keep going up, that's going to be great news for us. Moving on to the Aussie Kiwi, I think the Aussie Kiwi is very clearly a wave 1, a wave 2, and we are in a wave 3 on this one. I think this is the end of a wave Y on like the weekly, monthly time frame. So if this is a wave 3, then this has got a long ways to go. We're not even to the 100% Fibonacci extension of wave 1 projected out the top of wave 2 yet. So I would expect this to go down probably at least below this trend line. Most targets for wave 3s are the 161.8, which is all the way down at the 1.05525 area. So definitely looking for shorts on this one. Definitely looking for pullback entries for the continuation of the downtrend. So just like the other Swiss pairs, the Aussie Swiss could be a wave 1, a wave 2, and a wave 3. If it is a wave 1, 2, 3, then this is going to keep on going, making lower lows, lower highs. If it really is a ABC, then guess what? It's going to go down, make a little double bottom at a Fibonacci level, maybe not visible on this time frame, maybe visible best on like the 8-hour, 12-hour time frame, but you definitely should be able to tell the difference between a wave 3 and a wave C if you know what you're looking for. Meanwhile, while we're learning whether it's a wave 3 or whether it's a wave C, I definitely will continue to look for shorts on shorter time frames. Moving on to the Aussie CAD. The Aussie CAD still to me looks very corrective. I'm watching these Fibonacci levels very closely, but to be honest with you, the trend is down on the daily. I mean, you can't really argue the fact that the trend is down, and if it just keeps on going down, then fine, we'll just keep looking for shorts. But if it gives us a good Fibonacci bounce, especially if we get a break of structure, then I would definitely stop looking for shorts and start looking for longs again. But technically, the trend is down, so the trend is your friend. We should be looking for shorts. Now, when it comes to the pound Kiwi, pound Aussie, euro Kiwi, euro Aussie, they're extremely correlated. They're all doing very, very similar things. I actually think the pound Kiwi is one of the clearer ones out of the bunch, that this is potentially impulsive down, end of a correction, and then A, 3 waves down, B, and potentially we're in a wave C. Now, if it is an expanding flat, which it looks like it is, then it will likely go all the way up to here and then go back down for either probably a 1-2, honestly, 1-2-3, especially if this is a wave C up here. It should be a 1-2-3. It could possibly make a running flat too, and a running flat will make a lower high. So if it does go up, and if it does, show you a break of structure on shorter time frames, then it could make a lower high and continue down. For now, until I can identify the end of this trend right here, probably on a little bit of a shorter time frame, like the 8-hour, 12-hour time frame, until I identify the end of this trend, I would continue to look for longs. And when I do identify the end of a trend, I will stop looking for longs and start looking for shorts again. So anyways, moving on to the pound Aussie. Pound Aussie is definitely going up very strong. I do have an alternative count on all four of these pairs where maybe this is not an ABC crescent and maybe it just keeps on going up. But like I was mentioning before, that's why I like my strategy so well, because I will use Elliott wave analysis, and if I'm wrong about my Elliott wave analysis, I'm looking for longs on shorter time frames, right? So if it never gives me the end of a trend for a wave C, then I'll continue to look for longs, and if it just keeps on going up, then really there's no problem at all. But while I'm looking for longs, if I see a Fibonacci bounce at an end of a trend, then I'll stop looking for longs and start looking for shorts again. Kind of like those other Swiss pairs, I think it's an ABC, but if it proves to be not an ABC, but a 1-2-3, it just keeps on going, I'm looking for longs on shorter time frames anyway, so that's definitely not going to create an issue for me. So, moving on to the pound Swiss, just like all the other Swiss pairs, it's either an ABC or a 1-2-3. I don't really worry myself to know, because if it's an ABC, then it will prove itself to be an ABC by, bouncing from a fib level, by giving us a nice break of structure and continuing the uptrend. If it is not an ABC, then it's just going to keep on going down and down and down. I'm looking for shorts on shorter time frames until it either proves to be a wave C or proves to be a wave 3. So either scenario, I don't really care what it is, because I'm just going to continue to look for shorts. Now the pound CAD, the trend is up on basically every single one of these time frames. The trend is definitely up. And what that tells me is it potentially could go up and break these highs. But on the shorter time frames, this is very, very clearly 5 waves down. So you would think that this move up would be like an A, a B, and then go down for a wave C, and then potentially go back up later on. But oftentimes what you think is a wave B is not a wave B, it just keeps on trending up. And because the trend is up on basically every single one of these roadmap higher time frames, I'm going to be looking for longs in an uptrend anyways. Moving on to the Euro Kiwi. So the Euro Kiwi is a little bit different than the pound Kiwi, but same concept. If this goes up and gives me the end of a trend, then I will definitely stop looking for short longs and start looking for shorts again, because I do suspect that this is the end of a crescent up here, and if it is the end of a crescent, then this thing has a lot of downside potential on the weekly time frame and monthly time frame. But while I'm looking for longs, right, so I'm looking for longs, so while I'm looking for longs, if it just keeps on going and keeps on going, definitely not going to create a problem in my book. So moving on to the USD. USD is a little bit more similar to the other ones, as in it's got 1-2-3 waves down, impulsive up, 1-2-3 waves down. I still think this is likely like either a running flat or an expanding flat. My target for an expanding flat is right here, because that's the Fibonacci extension for a wave C expanding flat, which also lines up to the 61% Fibonacci retracement. So if we do get the end of a trend around one of these levels, then I will definitely stop looking for longs and start looking for shorts again. If this is the end of a wave C right here, then it definitely will make a lower high and definitely will continue down. But this is the daily time frame, and it could take a while for this to complete. And while we're looking for longs on shorter time frames, if it bounces and doesn't break structure, bounces, bounce, no break of structure, guess what? I'll just continue to go long every single chance I get. I'm not in the business of trying to identify the top and bottom of every single one of these moves. I'm in the business of entering continuation patterns for these moves and just continuing to trade with the trend until the trend is proven to be over. Moving on to the euro pound, man, the euro pound is a little bit of a confusing one as far as it comes to the count. It definitely is an uptrend right here, and we definitely have a break of structure, which is why I would think this is either a wave A or a wave 1. I would think that this would either be a wave B or a wave 2, and I would think this break of structure perhaps is telling us that we should start looking for longs and either expect to see a wave 3 or a wave C. Even if it is a wave C, most wave Cs do take out the high of wave A, so either scenario, I think we should be looking for longs, especially now because we have a change of direction with that break of structure on our roadmap time frame. So I'm definitely going to start looking for longs on the euro pound going into the weeks coming ahead. And the Euro Swiss, I mean, the Euro is actually quite a bit weaker than some of the other Swiss pairs, but it's the same exact concept. This is either going to go down for a 1, 2, 3 and just keep on trending, or maybe it really is an ABC, and maybe it really is going to bounce from a fib level. I will definitely continue to look for shorts until these higher roadmap timeframes prove one scenario or the other. If we get a Fibonacci bounce and we get the end of a trend on the shorter timeframes, I will definitely stop looking for shorts and start looking for longs. While I'm looking for shorts, if it just keeps on going and keeps on going, definitely not going to create any negative trades for me, I don't think. Moving on to the EURUSD. The EURUSD definitely looks like it ended in ABC correction. It looks like one down, three up, one down, 50% Fibonacci level. Break of structure on like the 8 to 12 hour time frame. Definitely looking for longs if this is the end of an ABC, even though I have this marked as a wave C right here. If this is the end of an ABC, then it will go up and make a new high for sure. So while we learn what it is, I will be looking for longs on shorter time frames. Now, when it comes to the yen pairs, I kind of cruise through the yen pairs a little bit quickly because they're pretty much all the same. I honestly think that the yen pairs are actually some of the easiest ones to trade just because they're so correlated with each other. They're all doing almost exactly the same thing, just a little bit of a different form. And originally, I was thinking that this move down right here was a C, and that this was going to be like an A, this was going to be a B, and this was going to be a C, and this was an A, a B, and this was going to go up and make a C of B. Because if you've seen my full top-down analysis on the euro pound and the pound yen, not the euro pound, but the euro yen and the pound yen, then you know that at some point we're going to have to make a wave B. So the question is are we already in a wave B, or are we still in a downtrend? It looks like we're still in a downtrend, and guess what? I mean, the trend is down. The trend is 100% down. So what should we be doing? We shouldn't be worried about whether it's going to go back up or not, because if it does go back up, we'll be fine. We won't get the first little impulsive move, but we will get every single pullback from that point on. And if it doesn't do that and it just keeps on going down, then fine. We definitely should be looking for shorts on shorter time frames. It does kind of look to me like an ABC, and it does look like it potentially will go down and break the previous lows. Moving on to the CAD yen, like I said, a lot of these yen pairs I was originally thinking was like, like a wave A, a wave B, that it was going to go up and make a wave C, and this was going to be a wave A down here. This was going to be an ABC, a B. This was all a wave 4 on the monthly, weekly time frame. If you're not really sure what I mean by that, then just watch one of my previous euro yen and pound yen videos, and you'll see exactly what I mean. But really, I mean, kind of overcomplicating it. It really just looks like 1, 2, 3 waves up. Looks like a lower high. Looks like a lower high. Looks like it's just going to keep on trending down. I'm watching these Fibonacci levels closely for evidence of a turn. But if that turn doesn't happen, I will just continue to look for shorts on shorter time frames. So now let's kind of cruise through here because they're all doing exactly the same thing. The trend is down on the Kiwi yen. Definitely looking for shorts on shorter time frames. The trend is down on the Aussie yen. Definitely looking for shorts on shorter time frames, and this one really looks like 1, 2, 3 waves up. Fibonacci bounce continuation of the downtrend. Corrective up and impulsive down. Corrective up should lead to impulsive down. And moving on to the pound yen, I do full top down videos on this one every single day, so if you don't really understand what I mean by potentially being in a wave B, definitely watch that video and you'll totally get what I mean by that. But really, I mean, it just looks like 1, 2, 3 waves up. It just looks like now it's continuing the downtrend. Definitely looking for shorts on shorter time frames. Moving on to the euro yen. Euro yen is a little bit different also because, I mean, it does definitely look like a little bit of a 1, 2, 3 pattern. It definitely could make a higher low and go up. and make a wave C. Like this would be 3 waves of A, 3 waves of B, 5 waves of C, and this would all be a wave B on the higher time frames, like a wave A, a wave B of wave 4. But I don't really know if that's what it is. I'm definitely looking for sorts right now. And while I'm looking for sorts, if it just keeps on going, then fine. While I'm looking for sorts, if we get a end of a trend on sort of time frames, then I'll stop looking for sorts and start looking for longs again. Moving on to the dollar yen, pretty much exactly the same concept. I do consider the dollar yen more of a yen pair than a dollar pair. If you could compare the dollar yen to other yen pairs and then compare it to other dollar pairs, the dollar yen is definitely way more of a yen pair than it is a dollar pair. So just like the other ones, I mean, the trend is definitely down. We are sitting at a Fibonacci extension level. I mean, it possibly could give us a break of structure on, 8 to 12 hour time frame. And if it does give us a break to the upside on one of those sort of time frames, then I will definitely stop looking for shorts and start looking for longs again. As of right now, I'm looking for shorts, and if it just keeps on going down, fine. Looking for shorts anyways. Moving on to the US dollar Swiss. I was just like the other Swiss pairs. I was kind of thinking that this possibly could turn up, but really, if you zoom out on the weekly or you zoom out on this daily, it just kind of looks like it's in a downtrend, and there's definitely no evidence of the downtrend being over. I mean, lower high, lower high, lower high, lower high, lower high, lower high, lower high. Next Fibonacci extension level is way down here. I think we should continue to look for sorts on sort of time frames, no matter what we think about the Elliott wave count. So before we move on to the final $1, $2, $3, $4, $5 pairs, definitely check out my membership program. It is only $30 a month. It's extremely cheap. It is a monthly membership, but it is only $30 a month. It comes with a trading course, which is about 35 videos long. It's about 7.5 hours of training. It also comes with daily Zoom meetings that I do every single day during the New York trading session, starting at 1 p.m. London time or 8 a.m. New York time, Eastern Standard Time. Usually lasting about 90 minutes to 2 hours long, where we do live analysis, live teaching, and live trading. Just keep in mind that I am a swing trader. I'm not a scalper. I do not really trade any of these short time frames at all. And every single swing trade I do take, I do share with the group at the time of entry. So every single swing trade I take, I do share. Now, this is my Discord channel, which is where all the benefits are if you are a member. Now, these are the trade signals that I gave out to everybody this week. If you want to pause the video and go through and check them out, you definitely are more than welcome to. So definitely check it out. I don't know, there was probably close to a dozen trades this week. Yeah, not all good, not all good, not all bad. So anyways, definitely check that out if you want. You can cancel at any time. It is only $30 a month. Just please keep in mind that I am not a scalper. If you do join my membership, you're not going to see me on the 1 minute, 5 minute, 15-minute time frame trading ever. So anyways, moving on to the US dollar CAD. I think the US dollar CAD is a wave 1. I think we're currently in a wave 2. I think it's going to go up, at least take out these highs, probably to the 30, maybe to 50%. So I definitely am looking for longs on shorter time frames. Moving on to the Kiwi. I mean, really, the dollar pairs are actually extremely correlated also. I still think that we are in an uptrend on the very high time frames like the weekly and the monthly, but I do think this is possibly going to go down to one of these lower fib levels before it actually continues the uptrend. So until I can identify the end of this correction, which I don't think is going to happen probably until maybe even FOMC on September 18th is probably a likely time for a correction to end. So until that point, definitely looking for shorts and shorter time frames. The trend is down. We have a break of structure on the shorter time frames. The trend is definitely down. Moving on to the Aussie dollar, which is one that I'm actually short on now. This is a trade that I did provide to the group at the time of entry, which is way before the non-farm payroll news. We got in a few minutes before the news came out, and it did spike up initially, but we all went short. We knew that it was going to go down. We held our shorts, and man, it turned out to be an extremely profitable trade. I also went long the US dollar CAD, and I also went short the Euro US dollar, and the Aussie dollar I'm also short too. So definitely some pretty good sweet trades, definitely. I for sure think that this is a correction to this last move up. And honestly, it kind of looks like a trend. So, I mean, it possibly could make some sort of a three-way pattern. It kind of seems like something that potentially is going to continue to go down for several weeks before it actually goes up. And we have interest rate coming out on September 18th, which is probably going to be a good time for this to potentially head back up. The pound dollar, same concept. I mean, it definitely looks to me like we're in a cuts into this move up. We have a break of starts at the downside on like the 8 to 12 hour time frame. So I think that we are very likely to at least go down to the 38% minimum. So definitely looking for sorts on sort of time frames on this one also. I would kind of expect it to probably end up doing maybe something like this before it actually continues the uptrend. You know, make some sort of a more proper looking pullback like these pullbacks in the past. And the euro dollar. I sorted the euro dollar too at the news, and it wasn't quite as strong down as the Aussie dollar and some of the other ones, but definitely a pretty decent trade. I think that this one also is very likely. I mean, I do see the possibility that it drifts up a little more, it makes more of a proper wave B before it goes down again, but yeah, definitely think it's going to go down. I've got my Fibonacci retracement on this last move right here. I expect to see some sort of a three-way pullback to one of these Fibonacci retracement levels, and I expect it to continue up from that point on. So I'm definitely looking for sorts on the dollar pairs. I'm looking for longs on the dollar, sorts on the dollar pairs. So, anyways, I hope everybody enjoys the rest of their weekend. And as always, thank you and happy trading to everyone.